Election day. It is election day in the United States. Very exciting in terms of market commentary. But if you don't know me, my name's John, Senior Market Analyst here at Blueberry. If you have any comments, questions as we're going along today, please feel free to drop them in. I want today to be fairly casual when it comes to, I want people chatting. I want to discuss what's going on in the markets, discuss potential outcomes for the market going into today's session. It's going to be an interesting one. The polls are very, very tight in the US right now. So it's going to be very, very close. And when we do see things that are very close, we can see a lot of false moves and false starts and X, Y, and Z. So, going to be an interesting one today. Hi, Ratish. Hope you're doing well. I'm doing really well, thank you. Inno, big shout out to Inno. How you doing, Inno? Hope you're doing well, mate. I'm finally back live streaming. So this is the second stream, I believe. We did one last week. We're finally back in a live stream from last week, and yeah, this is the second one back. So let me know what you're watching today. I would love to know your thoughts and ideas of what you think is going to happen into the markets. I'm going to give you my opinion, my thoughts on what's going on, and then we'll go from there. Might take a little look at what the hedge fund's positioning is like. I did a video about this yesterday, if you managed to catch it, just talking about how hedge funds are positioned going into the election, which I find really interesting. And we can take a look at some seasonal stuff as well. But I thought I'd kick it off with the S&P 500. This is a market that I'm going to be watching very, very closely going into this election, because I think this is a market that is going to perform well in any scenario. And the reason why I believe that is because typically stock markets perform well after an election period. Now, the reason why that is more to do with what we typically see around an election, which is volatility increasing. Okay. Carol, welcome to the live stream. Hope everybody's doing well. But yeah, we're going to talk a little bit about volatility. I'm going to actually bring on the trading view charts for a moment, just so we can take a look at the VIX and just have a little look at how the VIX is shaping up right now. Now, the volatility index usually climbs before the election. So we typically do see sort of a 12-day period. We usually see the VIX climb a little bit higher. And that's what we've kind of been seeing, right? The volatility around towards the end of October did start to turn. It's usually around the 25th of October we start to see a turning point, and we did start to see that eventually, and the volatility in the markets started to rise a little bit. Now, has it risen as much as what I would anticipate? No. Considering it's such a 50-50 event, I thought volatility would be higher, but volumes are down. If we go take a look at history, let's say, and we go and have a little look at what's happened in the past. This was the last presidential election, and this was the kind of run-up into that. So this time around about the 12th of October, we started to see the run-up. And the volatility index around the election was trading around 35.7, okay? And we're nowhere near that at the moment. Currently, prices are sitting at around about 21s, 21, 22, so 21.90s. And it hasn't really gone anywhere all day, which is surprising to me, because I thought we would see some kind of run-up. But what's most interesting to me is what happens after the event, because I think as a retail trader, you can probably get caught up in trying to see this as the money-making event, right? The big event to make a load of money, and you'll be sitting there in front of your screens all day looking at different reactions, maybe watching Bloomberg and seeing what the reports from Bloomberg are coming in. But is that going to benefit you really? From my personal experience, no. I did this for the 2016 election when Trump was again involved, and I was heavily long gold, and I got burnt from it, because back then in 2016, I thought that if the world was in trouble, or if Trump gets in, that's bad news. Bad news equals, safe havens. Safe havens equals gold. So that was my kind of plan to trade the 2016 election. From experience now, I would never do that ever again. And what I know now is how gold correlates with the rest of the markets. Back then, I was very naive to think that it was just when the world's in trouble, buy gold. That's not the story. That is definitely not the story anymore. But the volatility is something that I want to take a look at, because I feel if the volatility index starts to fall, I like the idea of being a buyer of US equities. In that case as well, I also like the idea of being a buyer of gold. Now, I don't know if you know, but gold and the S&P 500 correlate quite similarly, and I'll just show you that here. So let me just go to the S&P 500. We'll just open this out a little bit, and we'll just add a few charts to compare with what's going on at the moment. Let me just open this up a little bit. Let me just go full screen. F11, there we go. Now, what we're going to do is add, I'm just going to add XAU on. I'm not going to go with the futures contracts, but we'll just add gold on here. And what I'm going to do is put it on a new price scale. Make these regular again. And the reason why I'm doing this is because I'm showing you how the price of gold can correlate with the S&P 500, right? Typically or commonly, you'd probably think that isn't the case, okay? But it can be the case. And the way I like to picture it is, what are people doing or investors doing in each scenario? So usually if the stock market's moving higher, you're looking at sort of risk on in the markets where, people are basically coming out of those risky assets and they're willing to invest into stocks, but they also are willing to invest into commodities, okay? And we can see that here. So back in 2022, this was where we started to see the idea that the Federal Reserve would begin hiking interest rates. Now, hiking interest rates is bad for businesses, essentially. Businesses thrive a little bit better in environments with lower interest rates because they can borrow more. Essentially, they can take more risk, essentially, as well. When we see a period of sustained higher interest rates, it can often lead to the Federal Reserve or a central bank basically trying to cool the economy. And we saw that downside in the S&P 500. Now, typically, someone might go, well, in that case, I better go to gold and rush to gold. But if we look at gold, which is the purple line here over the top, this line chart, you can actually see it followed a very, very similar pattern to the S&P 500. I don't know if a lot of people look into that on correlations and stuff, but I really like to use correlations in my trading. But essentially, when the S&P started to kind of break into new highs, so did gold, and gold continued. Again, we had this kind of bearish period in the S&P 500 for a period of months. Gold was also felt to be bearish in that period. So there is a strong correlation between the two. So I think I like the idea of potentially looking at both of these assets in a particular scenario. Now, scenario I'm talking about, let me just get rid of the overlay here of gold. Hi, Irfan. Hope you're doing well. What I'm looking at essentially is, if we do see the S&P 500 fall for whatever reason, whether it's too close to call, volatility starts to spike, and we do see a drop on the S&P 500, then I will look for a rebound. I'll look for a bottom to form and potentially look to be a buyer of this market. Now, remember, this is just my personal views. These are not trading signals. You have to do your own due diligence and your own research before you do anything. This is just my opinion. And right now, my opinion is that we could see a sort of rebound in stock markets. Now, there's a few levels that I like. One is down towards this kind of 5,400 area. This is also kind of coinciding with a trendline confluence. Okay, so we've got this kind of support through here. So that area I quite like. The other area I quite like as well, depending on the reaction, is 5672. Now, the only way I would kind of try and potentially trade this kind of zone is that if price breaks it and then closes back above it, that to me would be a good sign of a move higher as well. You know, the great Larry Williams is a big believer in this. You know, he has a strategy where the market moves higher, and if it starts to consolidate, breaks lower, but then closes back within the range, he sees that as a very strong, you know, buy signal. And I feel the same. Whenever I see these types of patterns, I like to look at them and potentially trade the sort of next higher low in that situation. And that's no different here for the S&P 500. So this is one market that I'm really going to be focused in on as well. If I just bring over the Volatility Index, which you can see here, I'm just going to index that. Typically, when we see spikes in the index, let me just get rid of these drawing tools for a second. When you see spikes in the Volatility Index, it's met with a negative move on the S&P 500. And I mean, I'm looking at, you know, if this was any other chart, let's say this was an hourly chart, right? And let's say it was an hourly chart of like euro, US dollar, and I wanted to be a buyer of euro and sell US dollars, I would be waiting for the break there to go long, because that's a very, I would say that's quite a bullish pattern, bullish trading pattern. So yeah, in my opinion, the S&P 500 is something I'm looking for, but I want to see that decline first. I think that's going to be good. One caveat to add to this, let me just bring up the seasonal chart. There's just one caveat to this that I'm slightly concerned about, especially because of the data that we're seeing in the US labor market at the moment. So if we just look at markets made clear here, and I'm just going to type in the, let's see, would it be, it'd be the E-minis, wouldn't it? It'd be the futures contract. So E-mini, S&P 500 stock index. And what I'm going to do is actually just look at the custom years. I'm just going to add 2007 onto there. And I'll take off the 20 years, right? Now, just looking at 2007 alone. Now, I don't usually do this when it comes to seasonal patterns because I usually like to look at more years. Or if you speak to Ray, who looks at a lot of the seasonal analysis and has built and developed this tool, he likes to look at more years in it to give it a little bit more value. But what I find super interesting is that we've got an 81% correlation with 2007. The movement sort of July onwards has been very, very strong. You know, in terms of usually between July and August, we be bearish. We was bearish. The yellow line is the current year, or the green line is the current year. And then even when we kind of find a bottom in August and move higher until October, we've kind of seen a very similar path, right? So this is my only concern. My only concern is that potentially we're following a very similar path to 2007. And if we do see that bearish move in the markets in line with volatility, is it going to lead to a bit more of a sustained move? That's my only kind of fear with that. But that being said, you know, we use technical indicators to be able to look for that rebound. And if price is going to be breaking through key structure points and through key levels, then you're not going to be a buyer, right? You're not going to be a buyer. So what I want to look for essentially is the market to come into an area of support, whether it be this kind of zone up here. Let me just change this back to regular, up at this kind of 5,600 area, or down towards the sort of 5,400s. That to me there would be good, but I would look for some kind of technical factor to change in order to be buyers of this market. Now, what's interesting, obviously, we're going towards the US Open at the moment, and I was interested to see how it may open. Pre-market has been pretty flat, right? Pre-market has been pretty flat here, so it'd be interesting to see how they open, how the market performs after that, going into today's session. But yeah, that's something to consider. Obviously, that goes hand in hand with gold. I feel like if we do see any kind of significant downside in gold, it'll probably be met with some buying pressure again. Looking at the sort of commitment of trader reports, you know, I still don't see too much of a short position being built at the moment by hedge funds and whatnot. So if we just have a little look at the COT reports here. Hi Ragai, yeah, long time no see. Long time no see. Hope you've been well. But also, guys, let me know your thoughts on what you think's going on. What do you want to know? What do you want to know about the election? Is this your first election that you're trading? I'd love to know that. But there's some really interesting COT signals out here at the moment that I will touch upon. But I wanted to just have a little look at what's going on in the gold market first, because I'm still not seeing the aggressive sort of shorts coming from the commercials. Now, we've kind of spoke about this for a while. Where I really want short contracts to be is here, right? Where it was kind of like when Russia invaded Ukraine, you know, we saw that kind of move down. I want short contracts to be building up to that in order for me to be an aggressive seller of gold. If we look at sort of the hedge fund, you know, positioning, if we look at sort of the net, okay, so I'm just going to bring the net on, which is just basically the difference between the long and the shorts. Yes, we've been at, you know, levels of extreme. You know, if I look left at that point, commercials have been, you know, at short, very similar levels back at 2022, where we had that spike higher. It's gone even a little bit beyond it. But we're starting to see that pick back up a little bit, very much with the hedge funds as well. They were long aggressively. So I do feel like a market top is close for gold, but when that is, I don't know. I mean, what we could do, I guess, is have a little look at gold and the 2007 price action, because if we look at the election year, we just have no correlation. I don't really know any markets that have correlations with election years right now. Maybe if I go back to the dashboard here, there might be something. Is there a way of filtering this? Right, okay, so there's an instrument here that says it's correlating 86% with elections, but that's going to be some kind of stock market, I guess. If we look at crypto, Bitcoin's got 67% with the election, which is going to be interesting because, again, I think crypto is an interesting space at the moment when it comes to... let's have a look at this then. EC is euro. So we actually have an 86% correlation at the moment with the election year and euro. That's quite interesting to see, considering if we look at the reports here, we have a buy signal from the commercial, from the commitment of trader reports. That's very interesting. Now, I did see this over the weekend. I have touched upon it a couple of times, and it is a market I am interested in. I've just been waiting for the election to get out of the way first. But yeah, they are net long the commercials at levels we haven't seen since the sort of middle of 2022 or middle to end of 2022, and then the market spiked higher there. Again, hedge funds are short at very aggressive levels. So depending on how this goes tonight, you know, I think there could be some really interesting outcomes. You know, we actually might see a bit of a sell-off in the US dollar. But let's talk about those outcomes. All right, let's grab a little bit of space up here because I think there are certain outcomes that we can discuss. Right, guys, first election. Are you going to be trading or are you going to sit out? That's another thing I'd like to know. That is another thing I'd like to know. Okay, so we're going to look if Trump wins. Okay, if Harris wins. You're in two positions right now. What are those two positions? So there are also situations that we have to talk about as well when it comes to the election, because it's not just about who wins. It's about who gets more people in the house as well. and they're calling it either a red sweep or a blue sweep, right? Now, a red sweep essentially would be Donald Trump winning the election and winning the House. A blue sweep would be Harris wins Harris House, right? So that's why we've got the conversation as well, because I think if Donald Trump gets the sweep, right, I think that becomes a very interesting topic, because there's been lots of reports that we should see US dollar strength, right? Why? Because he's looking to reduce taxes, okay, for the American people, but also to get those taxes back, essentially, he's going to tariff a lot of foreign countries. So that to me is very interesting, because Donald Trump's plans are seen as very inflationary. So that'll be dollar strength up. I think we would see bond yields up as well in that sense. What I would expect as well is for emerging market currencies. So that would be anything like the Mexican peso, maybe even the I was going to say the yuan, but I don't see China as an emerging market, considering they're the second biggest economy in the world. But anything to do with kind of like emerging markets, I would say, Mexican peso is going to be the big one, just because tariffs on autos is going to be pretty big. Donald Trump's favorite word is tariffs. So we're going to see a lot of that as well. And if obviously bond yields go up, we're going to be talking about inflation plays and Fed funds rates moving higher. And in those markets, what actually happens when the Fed hikes interest rates and inflation goes through the roof? We actually see the US equities perform bad, right? So Donald Trump's got to be very careful, because he's pro-business, right? Pro-business, pro sort of energy as well, I should actually say. He likes using oil for stuff. Pro-energy. So Donald Trump essentially has got to balance the books, because the way I see it is, if he does all these tax cuts and then adds loads of tariffs in the market, then there is going to be a potential for higher inflation. Now, like I said, back in 2022, when you look at the market and look at inflation going through the roof, stock markets perform poorly because the Fed had to increase interest rates. So I think he's got to balance the books, because he's pro-business and he doesn't necessarily want to scare that market. So, but that's, I think, later down the line. I think that's later down the line, and that's if he gets the sweep. Okay, if he gets the sweep. So this is what I'm essentially looking at when it comes to Donald Trump winning. Okay. Now, when you look across the board at like gambling sites and things like that, they have they are pricing in a Donald Trump victory right now. Now, there's an argument that should you use gambling sites to look at this stuff, or should you use polls? Polls are not very good or not very accurate information. So I would just leave that there. Polls are not very accurate. To second that, I think the gambling websites, they basically change their odds on who's sort of, on supply and demand, essentially. Are people putting money on Trump to win? The more people that put money on Trump to win, the less the odds are going to be for a Trump victory. So obviously, or sort of people are in the gambling world are predicting a Trump victory. So that's going to be something to keep your eye on. But when it comes to these events, my advice, right? So I've been through 2 of these events, live traded through one. didn't trade through 2020 election because I learned my lesson from the 2016 election, and I'd prefer to wait for the dust to settle now. Wait for the moves to happen. Wait for the market to decide and dictate where it's going to go. Then we can use our correlations and things like that to get back in and look at moves after the fact. Sorry, I can see some questions coming through. Right, guy, it's dollar yen and Swiss yen long. Very interesting there. So favouring that yen weakness in the market with those two. Just nothing. Hi. Hope you're doing well. This is my first experience with the US election since I began trading. Yeah, so this is it's exciting, right? Don't get me wrong, it's very exciting, and it can. The one thing I would say, if you are trading this, I would just be trading this at low risk. Okay, have your fun, have fun with it, but just be very aware that things can change very quickly. Okay, that's one thing I would say, because again, I'm talking from experience. It happened to me. I was gold long. I can actually show you. I'll come back to this in a minute. Back in 2016, I was gold long. Okay. And this is what happened. Now, at the start, I was doing very well. Okay. This was the move that happened in 2016 on gold. I was actually buying gold throughout this period here, and it was doing so well that I thought, this is great. It's going to smash through these highs. Market's just going to take off. And then it actually flipped. It flipped quite aggressively. And unfortunately for me, the market just moved lower and just kept stopping me out on every long move that I had on that night. So what I would say is, looking back in hindsight, should I have traded that move? No, I should have just waited for the dust to settle. If anything, look how the market performed over, the next days, even month towards the end of the year. Then I could have easily just trend traded that move down instead of having to try and guess what was going on, right? Because that's all I was doing at the time. I was guessing what's going to happen and guessing how the market will move. So I don't like to do that anymore. That's something I thought I'd share with you. Irfan, I opened silver longs this morning, even though I decided not to trade this week. It's hovering now at my TP. Yeah, I like to hear that it's close to TP, because I would be out of anything right now. Silver's a really interesting market. We actually had a commitment of trader signal short that appeared on the 25th of October. And I've been monitoring this for short positions, and I quite like the idea of that breakout here on the 4-hour chart. And the market's now kind of trading down towards these lows in here, having a little consolidation. I'll be interested in potential further shorts, but it's going to be interesting, isn't it? If we go back to gold and we go back to the situation here, we could also argue that things like copper, iron ore, I would say negative. Okay, because they're going to start tariffing China heavy, right? And who imports a lot of copper and iron ore? It's China. Where's that going to have a negative effect? It's going to have a negative effect on the Australian dollar. Okay, so this is another market that I feel is going to be one to watch as well. And this kind of goes the opposite for Harris, right? I think if Harris wins, I think you're probably going to see the US dollar weaken. Okay, I think you'll see bond yields fall, and that's because Harris is more in line with what the Federal Reserve want to achieve and what the Federal Reserve want to do. So I feel like it would be looking more towards bringing inflation down in line with what the Federal Reserve will want to do. So I think we'll see bond yields fall, US dollar weaken. You actually probably see emerging markets doing well, because a lot of her rhetoric has been around inclusivity and bringing people and working with other economies. So emerging markets, I think, will probably do well. What What else? Yeah, energy would be the opposite. I think it's going to be probably negative for energy prices, because I feel like Harris will be more, thoughtful on economical pressures of the environment. So I think they should try and be more environmentally friendly. So yeah, that's just something that I actually think Aussie dollar would be stronger, because I feel she would try and build relations with China. And the Aussies are a very interesting market, because we did see an interest rate decision last night. Let me see if I can bring up the... Let's go here. We had the RBA cash rate decision last night, 4.35%. So, and in this, they basically said that they're not in a space to cut interest rates yet, which makes a ton of sense to me. Data out of Australia hasn't been particularly bad. The only thing you could probably say is the headline CPI last week came in lower. But I do think like the Australian dollar is in a very interesting place because of what we've seen recently. Now, I've been fairly short Aussie US dollar since this level in here. So basically we had a commitment to trader report signal on the 24th of September, and look how prices reacted next, right? Look how the market has reacted. So basically I've been short on breakouts here throughout the entire way, and you can see the Australian dollar is actually performing pretty well right now, because I think that the market is in pricing the fact that China haven't been bringing the stimulus. So this is why Aussie's been a little bit weaker. It's been fueled by that. But could we start seeing a little bit of a change here? Could the market start moving higher? I think it's going to depend who wins. I think if Trump wins, it's going to be bad news for the Australian dollar. Probably see moves down towards 6,500 eventually. If Harris wins, we could probably see Australian dollar be a little bit more buoyed here. Any guesses on who will be the next US president? Now, this is a conversation. Let me know. Whoever's in the chat, type who do you think will win. If we go take a look, right? Let's go take a look at the odds. Let's go take a look at the odds. Now, the one way you can do this, or the quickest way I've been doing this, just open up Polymarket, okay, and you can see the presidential election odds at the moment. Now, it did change quite significantly over the weekend, okay, because there was a 66% or 66.5, 66.6% chance of Donald Trump winning the election, but that changed over the weekend, and that was largely down to the fact that a poll came out that Harris was in the lead in Iowa, which is an area where Donald Trump has done very well in the past. It's actually, won Iowa in the last two elections. So there was a potential for that to swing, and in that case, they were trying to price out the fact, that really changed things, and this is what I think is such a tight call. But at the moment, betting odds are saying that Harris is losing to Donald Trump, which is interesting. But if we go over to sort of, if we go and type in election polls, and we go to this one here, it actually has Harris in the lead by 1.3, so 48 percent there, 1.2, 48% for Harris, 46.8%. And now this is updating the average for each candidate in 2024 presidential poll, accounting for each poll's recency, sample size, methodology, and house effects. So at the moment, it's very neck and neck when you go and take a look at the polls. When you look at Polymarket, it's slightly different. They've still got Trump as the sort of winner here as well. But you can see the kind of volume between it in dollars. 1.3 billion in volume. Harris, 827 million in volume, which I find very, very interesting. You can do presidential election. is very interesting in terms of they've also got who will win sort of the big swing states. So the swing states you've got Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. Now, Pennsylvania is seen as sort of the key state. And at the moment, it's got Donald Trump winning in Pennsylvania, 61%. Typically, whoever's won the election in history has Pennsylvania. So this is one of the swing states that is looking as potential. So I think the market is going to be very much geared up to what's going to happen in Pennsylvania. I mean, they've got people betting on Trump wins every swing straight. I don't think that's going to happen, considering how close that is. I don't know if they've got any more swing states. But yeah, Pennsylvania is going to be the big one. Let me just see if there's any more information. I'm just looking at another sheet that I've done. So just some information on the Senate and things like that. So the US Senate has currently has 51 Democrats, including 3 independents and 49 Republicans. So the body is controlled by the Democrats. So the Democrats is Kamala Harris, Republicans is Donald Trump. So that is currently controlled by the Democrats. So this is why they're talking about different kind of sweeps as well. But there's actually 2 votes that go on in the US, which is kind of confusing. You have what's known as the popular vote. Okay, so the popular vote is just basically that people vote for the president. It doesn't actually give you the presidency. The electoral vote gives you the presidency. So that's those that vote within their states. But essentially, Donald Trump or Kamala Harris could win the popular vote, but it doesn't mean anything. It just means that they've won a popular vote, and if they don't have the electoral vote, they're not going to get in as president, which I just find super interesting in America, but a bit odd. I don't know if is anyone in the chat American. Maybe you can help us out here on why it is the way it is like that. I'm from the UK, so we do things a little bit differently over here. But it's, I guess, kind of similar. We vote in our sort of councils and things like that, and boroughs. But then you have the House. So the House, 435 seats are up for grabs, with 218 needed to win a majority. The Republicans hold a slim majority right now with 220 seats, and Democrats hold 212 with 3 seats vacant. So, according to a report, 175 seats are seen as solid Democrats, 191 solid Republican, 17 likely Democrat, 9 likely Republican, and there's a few others in there. So the thing is, an important thing to note is as well that although we may get a lot of information over the next 48 hours, the result might not be announced for the next few days. It happened back with Trump and Biden. They usually do a lot of recounts and things like that, and a lot of challenges that they have to get through. So last time, I think it took 3 or 4 days for the election to actually finish up. But this time, it's going to be really close. So it could take a little bit longer this time. But yeah, the Pennsylvania is going to be a big one. So let's talk a little bit about the impact, what it will have on the markets. Again, I just feel like there's a couple of different outcomes to really go with. Do I feel like it's smart to do these. No, personally, what I'm doing, I'm waiting to see how the market performs in terms of volatility. At the moment, look, we're down 3.4% on volatility at the moment. That means the S&P 500 is likely up. If you have a little look at how the open's gone, this is the US on the open, right? We're seeing upside initially. So this is the US open here, and we're seeing upside, which is interesting. I think volatility should be a lot higher than it is, but the only thing I can think of is if we go into indicators here and I just put volume on, you can see that volume has just been dying off. It's just been really dying off since sort of September. Really, the volumes have pretty much died. If you take a look at the volumes back in 2022, we had quite a lot of volume there in bear markets as well, or bearish markets. I wouldn't say that was classed as a bear market, but be interesting to see how this does unfold going out throughout the day. But let me know what you guys are doing as well. I know some of you have got, right guys, looking at dollar yen, Swiss yen longs. I actually didn't mind Swiss yen longs after we came into these lows down at the 167. Swiss franc was stronger than the Japanese yen in my opinion, and the market has continued to move higher. But for me now, we're at this level of consolidation resistance. Dollar yen's going to be a very interesting play. I think if we do see significant volatility rising, then we should see dollar yen move lower, but we're not getting that at the moment. Market is not really in that sort of fear mode, so very difficult to pick out what's going to happen next going into this. And there's just a lot of uncertainties, a lot of unknowns. I'll be watching it, but I won't be actively trading it. I'll be looking at how the market responds. I think for me, what I'm trying to look for at the moment is volatility spiking. If the volatility spikes, I'm looking for equities to move lower. If equities move lower, I want to look at to potentially fade that move. That's the way I want to try and play these markets going forward. We just take a quick look at how the market's been shaping up in terms of currency strength and weakness. I haven't actually updated this in terms of the FX heat map. Okay, usually I will do the FX heat map and then do that, but because it's election week, I'm not bothering. But this is where the market kind of stands in terms of strength and weakness right now. If we go take a look at the strength meter here, what's kind of standing out to me at the moment is the fact that the US dollar is the strongest currency and is in a reversal zone. So I don't know how this compared to previous years. Do I have that data? Started this back in 2020. So November 2020. So it would have been around this time. Where was the dollar positioned? 0. So it's fairly neutral at that point. But after the fact, the next kind of few weeks after that, the US dollar was pretty bearish, which is something that we've already spoken about. So that's quite interesting there. Got into a reversal zone in December and then started to move a little bit higher in January, according to the currency strength meter, which have a little look at 2020. What happened to the US dollar after the election 2020? Yeah, the market was bearish, or dollar yen in fact was bearish, and then it started to turn early January, and dollar yen moved higher. So that's quite interesting to have a little look at. I didn't realize I'd had all that information there on the currency strength meter. So yeah, for me, that's the one that's really kind of standing out right now. It's in that sort of spot there of being in a reversal. So usually if we see that start to dip, I want to be selling US dollars at that point, very much like back here at the end of September. I like the idea of looking for the reversal here, and that's what it happened. The market gave a reversal and moved back to the upside. Other markets that are interesting to me at the moment, pound. Still like pound. Let's have a little look at the pound market at the moment. Still like the idea of being a buyer of pound, but it's just of what against. You know, I don't really have an idea of what that is against at the moment. Let's have a little look at pound US dollar. Pound US dollar has recovered a little bit. This was when we had the budget, and then the day after the budget we saw a significant drop in pound, but it just came back into this nice little demand zone down through here. Market rejected, started to push back to the upside, and is now coming back into that 1.3 resistance level. So pound, I'm not really, pound US dollar, I'm not that interested in. The one market I did really like was euro pound short. Ended up taking a short position through here, and then price just kind of consolidated. And then we had the budget, euro against the pound went higher. But I don't think anything's necessarily fundamentally changed here for Europe and the pound. You know, I think for me at the moment, euro is still a market that's under a bit of pressure. The only thing I like is that there's a commitment of trader report signal to buy euro at the moment. So I think that the commitment of traders has a stronger hold over me than what my currency strength meter does. So I'm looking at where can I be a buyer of the euro at the moment. Euro CAD's at resistance. You know, euro Oz I don't want to get tempted into because of the potential China problems. But this would be a market I like. And also euro kiwi. But it's interesting to see. If we just flip back to, I'm going to flip back to the COT charts, and then I'm probably going to leave it there. Let's go and have a look at the COT charts again. What I find fascinating at the moment is you've got a 100% buy signal on euro, okay, and we've obviously already had a little bit of a detailed look at what's going on here in terms of the net positions. They're aggressively long the commercials, non-commercials, which are your hedge funds and large speculators, aggressively short. I would want to be a buyer of the euro right now. In normal market conditions, I would want to be a buyer of euro. But if you look at the US dollar index, the US dollar index also had a long signal as well. Now, obviously, when you look at the dollar index, it's just inverse of euro dollar. So, because it's heavily weighted to the euro, this was the long signal that we had back at the end of September. And look at, you know, we obviously had that rally up in the US dollar against most currencies. But, you know, to me, that rhetoric hasn't changed too much, especially when you do look at the net positioning. Yes, it started to curve up a little bit, but we're still at these kind of aggressive levels that haven't cut the positions by a long way. So, yeah, that's quite interesting because I like to do, obviously, they correlate heavily. So I'd be looking more at the euro futures in this regard, and I'd be looking to potentially be a buyer there, I think, for euro. I mean, yeah, I'm just waiting to see how this dies down first. Treasury notes, signal as well, natural gas as well. Again, this I think could be something determined by what's going on. I like the idea of being a buyer of natural gas. If you look at again at hedge fund positioning, hedge funds were aggressively short. Again, when that happens, they take profits on their positions and the market can move higher. Commercials are aggressively long. So we've got two opposing situations there. So I did like the idea of being a buyer of natural gas. But again, I'm just kind of sticking with cash at the moment. But this would have been an area where I looked for a bit of a move from down at this support zone. I actually took a little long position on this last week in and around this area. And I like the idea of price kind of moving higher again as well, because seasonally natural gas performs pretty well this time of year, you know, going into those sort of winter months and whatnot. Where's that line gone? I can't see the line. Okay, here we go. We've broken this kind of trend line. resistance as well. So we've moved from being bearish to bullish. So I do quite like natural gas upside here, because we have a commitment to trader signal to be a buyer. So that's something I'm also very interested in. The only other market I was interested in was platinum shorts. I don't know. Has anybody tried platinum? Has anybody tried platinum? I've been short platinum. Again, what's happening here is commercials are aggressively short. Hedge funds are aggressively long. When that happens, we can see a reversal in price. And if we go and have a little look at what platinum is doing right now, we can see that the market fell from quite aggressively from those levels of resistance. Now, we were talking about this here. Okay. So ever since the market came into this resistance, this is when we had the commitment to trader report signal. And I've just been waiting for good opportunities to get in. There was a nice pattern. If we go onto a lower time frame up here, be able to see nice little consolidation, right? Market then broke out of that move there. So that was a really good move to the downside here on platinum. So that's one that I really liked. I still like this short. You know, if anything, I'm just looking for areas where the market could come back into and retest. You know, I like previous highs, so I don't mind looking at this kind of area where price is at the moment for a continuation. But again, I'm not going to touch this until after the election. If anything, if I see the market kind of spike higher and we still have that COP signal, you know, I don't mind looking for the short on things like that. So that was another signal I liked. Ratish, I've been looking at platinum, but waiting for the election to be over. Yeah, same. And that's hard, isn't it? Because, you know, as traders, we want to be active. But sometimes it's better to do nothing than kind of, you know, do anything at all, really. Sometimes it's better to just stay cash for now, wait for it to all boil over, and then have a little look at the markets. What are your thoughts on gold's future? Do you believe it's poised for further price increases, or is a correction more likely? That's a great question. I think for now, I still see gold long. The what I'm really waiting for is, you know, and I put a lot of weight into the commitment to trader reports, and I'm waiting for this to basically show us that hedge funds or commercials are heavily weighted in one particular direction. At the moment, they are heading towards a short for me, but what I would really like, and you know, I keep saying this, but what I'd really like is these short contracts to be pushing higher, and they're not at the moment. Although the net positioning shows that, you know, we're at these kind of big levels, right? I just see gold continuing up a little bit more. But it's going to depend. It's really, it's hard, you know. I think the thing is, I can give you an opinion of what I think happens, but my opinion, you know, is just an opinion at the end of the day. I will wait for the market to tell me that it's going lower, and there's ways we can do that. Number one is looking at your gold commitment to trader report data, which I put a lot of value in. Looking at price action, right? If we look at this trend right now, you know, that to me is still fairly bullish. Okay, this little move there was quite aggressive. That's, you know, I feel like that's a good position intake there. If anything as well, I like to use my technical indicators, and if you have a little look at my stochastic here, we have started to go a little bit more bearish, but this obviously happens all the time. You know, if we look at the last time we went bearish, is it control to copy? Or is it shift? No. Okay, I'm going to have to clone this up. Control and drag. Control. There we go. That was the last time we had that move, but then, all right, control, drag, okay. Very similar situation that happened here, but that was just in that sort of pullback phase, you know, in this upper trend. So for me, trend is still bullish. You know, if it's still going to make higher highs and higher lows, I don't want to be selling gold. If we get some kind of flip, and the market maybe takes out these lows here, then that to me would be a good sign that price is going to move lower. So let's say, for instance, Trump wins, gets the sweep, and Volatility Index spikes, S&P 500 moves lower, then I'd be happy to be a short-term seller of gold. If the VIX then starts to kind of drop off a little bit, then I'd be a buyer of gold again, until we get a significant short signal on the community trader reports. The only other short signal we've got is silver. Now, silver and gold do correlate if we look at the gold-silver prices. But for me right now, obviously, gold weighted to the silver. Gold is stronger than silver at the moment. Investors are more interested in gold over silver right now, and prices are moving higher. But I like gold to the upside in the very, very near term. I think 2025, first quarter of 2025, might see some changes to that. There's so many factors that come into play. So I think for me, it's all about kind of following my WCS method, right? So why do you want to be involved with gold? Okay, do you have good fundamental reasons or good reasons why? For me right now, I don't, because to be honest, I'm kind of sitting on the fence. Conditions, what are the conditions? Now, to me, the conditions are bullish because price is in a clear upward trend, making higher highs and higher lows. Okay, so it's bullish. So do I have the opportunity to apply a strategy? No, because my why and the conditions don't marry up. Okay, if I had the conditions of, let's say the COT reports were very bullish gold, okay, and then so that's my why, okay, then the conditions were also bullish, then I would be, I'd be buying every pullback essentially that formed in the market. All of these pullbacks I'll be looking to buy onto. But right now, it's just in a little bit of state of limbo, and you can feel that across the markets. Oil, I think, is a very interesting play. I thought that we'd actually see oil prices move higher, but then we had the Israel retaliation to Iran, and they didn't target the energy facilities, and price moved lower. I think that's a very dangerous thing to price in, considering Iran are now considering a retaliation again. And what is the smart thing that Israel could do in that situation? It could be to take out their economy, and their economy is run by oil. Take out the oil refineries. Can Iran respond appropriately? Possibly not. So I think pricing in lower oil prices is a little bit dangerous at the moment. And again, that's kind of been felt across the community trader reports as well. Just have a little look at crude oil. You can see that we're getting closer to a buy signal here. And why is that? While hedge funds are aggressively short, commercials are aggressively long. At one point, the supply and demand of that is going to overturn, and we're going to see a turnaround there. So yeah, I'm more on the side of buying oil at the moment. But again, it's all going to it's really hard to kind of cement anything down this week, because the election could really throw doubt into a lot of this, especially in the long-term play. So sorry, just nothing. I feel like that's a bit of a sit on the fence answer, but it's the answer I'm going to go with. It's a bit of a coin flip, and I don't trade coin flips. I don't like trading those at all. Right then, we've been going for about an hour. I'm going to leave it there. Good luck to everybody tonight that is trading the presidential election. I will not be one of those people. But good luck to you if you are, and please do it at a lower risk. Do not let this one event be the reason that you blow up an account. Do not let this one event be the reason you blow up an account. Be sensible. If you are going to take risks, take very, very low risks. Take very, very low risks. And we'll see how this plays out in the next few days. You know, maybe by Thursday, we'll have some answers. We'll have some big market moves, and we can discuss what's happened and what's going on. So, thanks for watching, guys. Appreciate you all. I'm starting to lose my voice a little bit, so I'm going to head off. And good luck. Good luck. Speak to you soon.